the insurance industry is affected, and how as agents we can be able to respond to these issues. So very much welcome. Today we are looking at 3 facets. I hope we'll be able to manage this topic in the limitation of this time. We are talking on tax issues. Last week you're talking about the VAT Act and how it has impacted on our business. We had a conversation with the Vice President of Association of Insurance Brokers of Kenya, but also the CEO of the same institution. And we were asking, what is this law? Of course, it caught us by surprise. We just saw the VAT law is decreasing from 16% to 14%, but in it were more clauses that were coming to affect the intermediary, the broking of services, financial services, and insurance service is one of them. The agents and the brokers are affected, and we need to understand how the tax issues affect us. What is the burden, and how does it affect my income? Does it affect my income? What is my obligation as a citizen? How will it? How will I engage with the underwriter, but also the insuring? So that is the question we have, and we are glad that we have a tax expert, a tax partner at Ronald and Associates. That is Peter Mwanja. Karibu sana. Also, we'll look at the regulations. The IRA, the government regulatory authority in the area of insurance, is also coming to have also introduced guidelines that are able to ensure that the insurance industry is not affected. And that will speak to the customer in terms of claims management. That will speak to the customer in terms of premium payment. How does it affect us as agents? That's a question we have, and that's a question we will be glad to engage in. How is IRA also ensuring that the penetration continues? We are at 2.5%, I guess, the last time I checked. It's quite low. It's quite low. So what are the interventions to see that we're able to get every mwananchi insured, covered in terms of medical, in terms of general, in terms of life, and all these things? And we'll have an actuary from IRA, Bwana Elias Omondi, karibu sana, when we have this conversation. And as agents, we also have our businesses. We run our businesses, our insurance. I'm the proprietor and the founder of Real Value Insurance Agency. And in that, I've employed people. I have an office that I need to pay for. In this season, when now I'm running this business, how do I respond to these issues? How do I manage the revenues? How do I ensure that my revenue is still coming in, even in this season? How do I manage my employees? Do I do restructuring? Do I tell some to go home? That is the question I'm in. And we have a very special guest, Dr. Nelson Kuria, the former CEO of CIC Insurance Company. And we truly celebrate him for the journey that he has had with CIC all the way from 1998 and being a lead in the insurance space. And one thing we celebrate Daktari is that he has been quite welcoming every time we've invited him to speak to the agents. We can see his passion and his engagement with the insurance agents, and insurance agents are the drivers. Basically, every business is about sales. Without sales, then a business does not exist. And so he has been able to appreciate the power of the agents in the running of the business. So most welcome, Daktari, and we want to say a very special welcome. So before we go to the main subject, I would just want our guests to say hi, and then we will go to tackle on the issue of tax, which is a follow-up of our meeting last week. So Bwana Peter, just say hi to us here, and then we can later come to the subject of tax. Karibu sana, Peter.
Okay, so thank you very much, William, for that introduction. So my name is Peter Mwanja, just as William has said. I'm the tax partner at Ronald's LLP. Ronald's LLP, we normally say we are an audit, tax, and financial advisory firm. In fact, one of the premier audit firms in Nairobi, and we are based in Westlands. So that's what we do. I'm pretty sure we'll be interacting further as we tackle this subject of taxation. And we answer the questions that you have on how this VAT Act will impact you. What is the effect of that on your business? What do you need to do to stay compliant? and a lot of other questions and scenarios that we'll be looking at. So thank you so much, and looking forward to a wonderful discussion with you.
Thank you, Peter, and looking forward to that rich conversation on the matter of tax and how it affects us. Elias Omondi, an actuary with IRA, and very passionate about the regulations and the framework that engage on the matters of insurance. Also passionate about digitization, and very much welcome, Elias. And I would just want you to say hi to us. Probably we can see you on video. So that we can progress. Elias, karibu sana.
Good afternoon, everyone. This is Elias Omondi, actually from IRA, dealing with policy development, risk supervision, and innovation. It is a pleasure to be with all of you in this particular gathering. We'll be able to provide insights on issues that we've provided in the recent past with regard to COVID-19, and basically engage and see how best we can essentially ensure that this industry goes to the high heights that we intended to grow, and also to see the insurance penetration being at the level that each and every Kenyan will have some form of protection. So again, thanks for the invitation, and we're hoping that we are going to have a very good engagement. Thank you.
Thank you, Elias. Thank you for coming back again. We were with you last week, but one, and it was a good start of conversation, and we hope sorry, you can now hear me. Sorry, yeah. So very much welcome, Elias, and thank you for honoring our invitation again. We were with you last week, but one, and we, had a conversation on the regulations and the tax aspects. So thank you for coming back again and being with us in this meeting. Dr. Nelson Kuria, very much welcome to this forum. Again, we appreciate that you found time to join us and to share your wealth of experience. Dr. Nelson Kuria is an experienced man in this area of insurance, having been at the helm of CIC Insurance, and we know CIC very well in the area of general health and even life insurance. And we celebrate you truly because of your leadership in that area and your leadership even in the government, serving in the government in both from the public sector, but also Dr. Nelson is the chairman of NWELL Financial Services, which is in the area of pension management and also financial services. So karibu Daktari, and just say hi to the guest here.
Thank you very much, William, and your colleague Clifford for disrupting my retirement. But I'm very happy to join in and interact with the people I left behind in the movement. I feel at home, and thank you very much indeed for keeping me in the loop and making me relevant. Even in retirement, I don't take it for granted, and it's very nice to see all of you still flying high the flag of the insurance industry, yes. One that I'm particularly passionate about even in retirement.
Wonderful. Asante sana Daktari. So ladies and gentlemen, in the interest of time, I want us to go to the subject of today. Today we're talking about disruption of the insurance intermediary, tax laws, regulatory guidelines from the government, but also the matters of COVID. COVID has changed the world. It has not chosen the white, the black, the yellow. It hasn't chosen any race. It has gone to the superpowers. Actually, I was surprised. Why did it have to start with the the superpowers? Talk of the China, the in the East, go to the West, the Americans. It's quite sad that it's still a pandemic that we are yet to know how do we go. We don't know the future of it. The medical is yet to be the medical intervention. We are still trying to find, and the only way is to be told stay at home. And yesterday I just listened to a very brief conversation with a health expert. They're saying the question was, do we, is it the human to stay at home, or is it for us to look for the solution so that this microbe, a very small microbe, is the one that is making people to retreat and stay in the house? What is the solution? So this COVID seriously has affected the whole world. It has not chosen. And when we go back, it will not be normal. It will be a new normal. We will have to change. We'll have to disrupt ourselves. And this is the conversation we are having today. So as we start off, I want to invite Bwana Peter Mwanja. He is a tax expert with Ronald LLP. As he has stated, they are tax and accounting experts. And I would want to invite Bwana Peter just to share a little on the introduction of the VAT, the new laws that affect the VAT Act, moving from 16%, 14%, and also the effect to the insurance intermediaries. So karibu sana Bwana Peter Mwanja, just in a nutshell, what is this VAT law and what are the changes that have happened and how is it affecting the agent?
Yeah. Thank you, William, for that introduction once again. Before I proceed, I want to ask the host to allow me to share my screen so that I can take you through my presentation.
Sure.
Yeah, pretty sure people want to at least see what is written.
Sure.
Yeah.
So let me just go there. All right, so you can proceed.
Very well. So thanks for that quick fix. So for the people who have just joined, I said my name is Peter Mwanja. I'm the tax partner at Ronas LLP, an audit, tax and advisory firm based in Nairobi. And this afternoon, I'm privileged to be in a position to speak to you regarding the recent tax changes, particularly for the insurance sector. I will be looking at which changes are these, how do they affect your business as insurance agents and also as insurance brokers, and how can you ensure that you comply, because we all know that whenever tax changes come about and you have gotten, or rather the taxman gets you in the wrong side of the law, there are obvious consequences. So without wasting any more time, let's go into it. Just a second. Okay. All right. So by introduction, the Tax Amendment Act was aimed at accomplishing two things. One,
Peter.
to increase the revenue generating channels for the government.
Peter?
Yes.
Do you mind putting it,
Oh, okay.
As a presentation?
Just a second. How is it now?
Thank you. Fine. Now it's fine.
It's fine. Yeah. Good. Thank you for that. So I said the Tax Amendment Law Act for 2020 was basically meant to achieve two things. One is to increase the revenue channels for the government, and secondly, to offer the much needed reliefs to the tax payers during this pandemic. So when you look at the law by large, it was meant to achieve those two objectives. And that's why we're saying that on one hand, they are saying that individuals will be taxed at a lower bracket, whilst at the other side, we are saying that services and products that were initially not taxable have been brought to the tax. And for the insurance sector specifically, I think the changes were mainly on VAT, income tax, and lastly, withholding tax. And I know for purposes of this discussion, VAT is the most important, given the kind of impact that will have on the way you're running your business. So maybe just to give a small brief in terms of what VAT is, we normally say it's basically a consumption tax that is placed on a product when there's value addition. So in other words, when you add value to a product, be it a service or a tangible item, then most of the time that product will have VAT element. The current rate for VAT, or rather what we call the standard rate, is 14%, but we know we have 8% for items such as fuel. We also have 0% for exports and other services and goods, including unga and the like. And we also have VAT exempt items. And I believe some of the services that we're talking about today were initially VAT exempt. In fact, brokerage services by insurance agents, by brokers, by security brokers as well, they were initially exempt. But then we are seeing this Tax Amendment Act saying that these people now need to pay VAT on it. So it is charged on supply of taxable goods and services made or provided in Kenya, but as well, things that are important to the country, they're subject to VAT most of the time, other than the ones that are obviously exempt. So under the VAT Act of 2013, which is basically the law that regulates VAT and how it's applied, people who make supplies that exceed 5 million in a year are required to register for VAT. Yeah. So again, VAT does not apply to everybody. It only applies to people who are making or rather supplying taxable services or goods, and those services or goods exceed 5 million in a year. Yeah. So if you're operating below 5 million in a year, then you should not be worried about VAT because it will not apply to you. So we normally say the 5 million is the registration threshold. And of course, sometimes the law says that even if you've not met the threshold, you can apply to the commissioner. And because I know I'll be using the word commissioner a lot, when I talk of commissioner, you understand that I'm talking about KRA. So it says that you can apply, or rather make an application to register for VAT, even if you've not met the 5 million threshold. So also the new changes, we are simply saying that the Tax Law Amendment Act of 2020 introduced VAT on commissions and agencies, brokers, and security brokerage services. As I said earlier, these were services that were initially exempt, but then effective 27th April 2020, when this particular act was signed into law, these services became vatable. So by vatable, it merely means that whenever you're transacting or wherever you are earning commissions based on these services, you're supposed to add 14% VAT that you'll be remitting to the government on a monthly basis. Of course, we're going to see how this is all computed and what are the timelines and how do you go about complying with VAT. So to reduce the burden, the agencies and brokers will obviously be able to utilize what we call input VAT on expenses such as stationaries, commercial rent, professional fees, to be able to reduce the VAT payable. So you'll notice that most of the items that you buy, or rather most of the expenses that you incur in the office, they normally have a VAT component. In fact, even commercial rent, the rent that you pay to your landlord, if your landlord is compliant, he's supposed to give you an invoice that has 16% VAT. So when we will be computing VAT on your commissions, you'll be able now to reduce your VAT payable with the VAT that you have paid based on your expenses. So this is a very important point for you to understand, that you not only pay VAT on the commission, you'll be able now to offset against the VAT that you incur when you buy items. That's why we said on that point there, that the VAT payable will be the VAT on commissions and which we otherwise we call output VAT, less the VAT on expenses, which we otherwise we call input VAT. So at the end of the day, if for instance your output VAT is 50,000 and you have 20,000 input VAT, the ultimate check that you write to the government will be the difference between the two, which in this case will be 30,000. I hope that is a bit clear. So let's go into how this will affect the brokers and the agents. And we say in an ideal scenario, VAT is supposed to be passed to the final consumer of the service. And for this particular case, the person who consumes the services of brokers is actually the insurance company. I know there's a tendency to think that the brokers work for the people who are being insured, yeah? But the truth of the matter is the people who benefit from the services of the brokers and the agents are actually the insurance companies, because you're generating business for them. Yeah. So these are the people who we are saying are benefiting from the services of the agents and the brokers, and they are the final consumers of your services. Because without them, then there will be no need for you to be in the business of agency or brokerage. So we are saying in an ideal scenario, this VAT effect is supposed to be felt by the insurance company or the underwriter and not to be borne by the intermediary, because the intermediary he's not really adding any value in between. He's just passing the liability to the people who will benefit from the services. However, there are certain instances whereby people are unable to pass that burden. And we are saying if in the event the intermediaries are unable to pass the burden, this will imply that their earnings, the net earnings that they earn, reduced component. So that is to say, if you're not able to pass the burden to the insurance company, you end up earning less money, or rather you'll end having less money in your pocket because what you earn is being paid taxes in form of VAT. So what should people do? The first thing to consider is to either to seek to renegotiate your terms with the underwriters. You tell your underwriters that, well, we've been charging you 5% commission on each premium. Now, due to this tax, we need to charge you, let's say, 6%. Yeah, so that could be one of the things that you need to consider doing. If that is not possible, you can tell them that from now going forward, we'll be raising invoices to you, and on top of the commission, on top of the 5% commission that we charge you, we'll load an additional 14%, so that you can shield yourself from the VAT impact. So saying if you are unable to do that, then it will mean that your earnings at the end of the day will be reduced by that 14%, and you'll have a lesser take home. So it's very important that that be understood very well, that the intermediaries should not be the ones to bear the burden of VAT. It's supposed to be borne by the end consumer, which in this case are the underwriters and the insurance companies. The other impact that it will have on the agents is, of course, there will be an additional administrative burden, which we are saying is that of filing VAT returns. Sometimes people who do not file VAT returns, their system of accounting can be very easy because there are minimal transactions and there are minimal administrative duties to be done. But then with VAT filing, it means an additional burden. And whenever you're not able, in fact, for the people who are running small businesses, it means they'll have to look for an accountant or maybe engage a consultant who will be able to submit these VAT returns on their behalf. So that is obviously an additional administrative burden that will be imposed on the brokers as well as on the agents. That we're also saying that in case you don't comply, in case you're unable to comply, there's that potential exposure of penalties from KRA, because KRA will tell you that you are supposed to pay VAT by 20th of the following month, you never paid, and they can impose penalties to you on that account. So basically that's how the agents will be affected. And before we look at more effects, I want us to quickly look at two case scenarios so that at least this is well understood. And we are saying in a scenario where an agent or a broker has sold a car premium, let's say of 100,000, assuming you've insured a nice Prado or a nice Land Cruiser somewhere and you've charged a premium of 100,000, and you as an agent, you're entitled to a commission of 5%. We want to see how this will impact on your business. So scenario one, we want to see in an instance whereby you have been able to pass the burden to the insurance company, and the commission will obviously be 5% of 100,000, which is giving us 5,000 there. So VAT on it is computed at 14%. Remember we said this will be applied at standard rate, 14%. So VAT will be 700 Kenya shillings. So, so this means that at the end of the day, the invoice, I know currently maybe you're not issuing invoices to insurance companies, but due now to these changes, due to the fact that you need to account for VAT, you might be required to issue invoices of these commissions. So in the invoice, you'll be required to raise 5,000 plus VAT. So the total invoice amount will be 5,700 shillings. Over and above VAT, we know there's 10% withholding tax that is applicable. So remember, we charge the commission on the amount net of VAT. So when computing withholding tax, we'll not charge on 5,700, but rather we'll charge on 5,000, which is the amount net of VAT. So it will give us 500. Remember, we're saying net of VAT because we don't want to charge a tax on top of another tax. So that's why we're not charging on 5,700, because it will obviously amount to double taxation. So 10% withholding tax will be 5 shillings. So the total payment to the broker in this case will be the 5,700 that you've invoiced, less the 10%, which is 500. So you'll end up getting paid 5,200 shillings. Okay. However, remember the amount that you've been paid is subject to VAT. So there was the element of VAT of 700 there as we computed. So when you now pay this VAT to the government, the commission that you'll retain will be 5,200 less than 100, which will now to 4,500. If you can put this into context, in case there was no VAT and the withholding tax was still at 500, it will mean that your amount will still be 4,500. So this means that in an event whereby you're able to pass the burden to the insurance company, you remain in the same position while like VAT didn't exist. I don't know whether we are together up to that point. Yeah. So if in the event you pass the burden to KRA, or rather to the insurance company, you will remain in the same position like you were before this particular law, yeah, which is 4,500. If we may look at the second scenario, whereby VAT is not passed to the insurance company, yeah, this will mean that your commission as you charge it will be inclusive of the VAT element. So using the same example, a premium of 100,000, so the commission will obviously be 5,000. So remember, you're saying this 5,000 will now be inside it. It will have some VAT element. So this 5,000 is actually now 114%, because it's inclusive of what? Of VAT. If we want to work back and get the VAT element, you see that the 1,000 will simply multiply 14%, divide by 14%. It will give us a VAT component of 614. So your 5,000 commission will have an element of VAT amounting to 614 shillings. So remember, we are saying you are still earning the same amount, only that in your earnings, there is some component of VAT. So the amount net of VAT will be 5,000 less 614 shillings, and you will remain with a net amount of 4,386 shillings. Yeah. So your total invoice amount will still remain 5,000. And if we come now to compute withholding tax, remember we said withholding tax is computed on the net amount, the amount without VAT. So the amount without VAT in this case is 4,386, as we have computed up here, giving us withholding tax of 439. So when you want to look at now the total payment to the broker, it will obviously be 5,000 less withholding tax of 439. So the total payment to the broker will be 4,561. But now this is before you pay VAT. When you pay VAT of 440, you remain with 3,947. So you'll see that when talking about a commission of 5,000, there's a difference of almost 550 when you're able to pass the burden, or rather you're able to pass that particular obligation to the insurance company as compared to when you're not able to. So obviously when you're not able to pass the burden, you end up earning less money by almost 550 Kenya shillings. So you can see the difference, and I think now you can begin to conceptualize the impact of this on your business. So if your commissions in a year are 50 million, so you can start now seeing the kind of impact that you're talking about, yeah? Because it could be, remember you're working with very small figures here. So when you work with bigger figures, it means that your business will feel a lot of pinch in terms of this. And that's why it's very important for you to be able to pass the burden. I want us to look at other possible implications. One, the insurance companies or the underwriters may want to increase the premiums, especially where the burden of VAT is passed to them by the agents. So remember, it will mean that they are paying more. With the same premium, they are still paying much, much more in terms of commission. And they might want now to pass that obligation to the people who are paying the premium. And they should, because remember we said VAT is a consumption tax. For agents, the people who are consuming their services are actually the underwriters. But now for the insurance companies, the consumptions, the people who are consuming the services are actually the people who are being insured. So it's possible that insurance companies or underwriters may want to increase the premiums accordingly. The new tax burden also increases the cost of doing business on agents and brokers. I think we've discussed that because you're saying now you might have to procure resources in terms of accountants, professionals who will be paid on a monthly basis. At the same time, you have this extra VAT burden to pay. The third implication, we are saying that it's possible that you might get penalties and fines from KRA, especially when you don't comply. Yeah, and people here who have dealt with KRA before, especially under an audit environment, they'll tell you that sometimes these penalties can be hefty and it can have serious cash flow effect on the businesses. So that could be also a potential implication of this. And then lastly, increase in premiums may lead to low uptake of insurance products. So I'm not into insurance business, but I already know that Kenya, we are lagging behind in terms of uptake of insurance products. So if there is an increase in premiums, this therefore implies that maybe the uptake could even become much, much, much less, which will lead to low business for everyone. If we may continue on VAT aspects, let's look at the deadline for filing VAT and also the applicable penalties. So we are saying that these returns are supposed to be submitted monthly before 20th. So for instance, for the month of May, the VAT return for May should be submitted by 20th of June. Yeah. So usually they give a space of like 20 days after the end of the month for you to be able now to do your compilation and file your return by 20th. It's also possible that in some months, you might not have any business. You might not have earned any commission. So, yes. So in an event whereby you have not earned any commission in a year or in a month, then you are required to file a nil return. So it's a zero return, but very important to file, because when you don't file that particular nil return, then there's a penalty for late filing. So the penalty for late filing, whether a nil return or a complete return, is usually 10,000. or 5% of the tax due. So if they normally look at whichever is higher. So if let's say you're filing a return and the tax to be paid, in this case, let's say it's 1 million and you filed it late, then the penalty for late filing will be 5% of the 1 million, which is I think about 50,000. So normally they look at the higher of between 10,000 and 5% of the tax due. On late payment, it's also possible that you can file a return on time.
The minimum we can pay is 10,000.
Yes, the minimum that you can pay is actually 10,000, given these sort of regulations. On late payment, there's a penalty of 5% when you file your return late. This is 5% of the tax that is due. Yeah, so if the tax due is 100,000 and you're paying it late, then you're going to have to pay it with an additional 5,000. But it doesn't end there. There's also a late payment interest. If you continue accruing it every month, there will be a 1% interest that will be applicable until that tax amount is paid in full. Let's look at other VAT considerations that you need to be aware of. The first consideration is that brokers who meet registration requirements are required to register within 30 days. Yeah. So people who are required to register or who have met the threshold for registration, remember we said it will apply to people who are likely to do business in excess of 5 billion in a year. You're required to register within 30 days. Yeah. So if we are, let's say this regulation came into effect, let's say 2 weeks ago. So you basically have 2 more weeks to be able to register for VAT. Failure to that, it may lead to a penalty of 200,000. So KRA could actually fine you 200,000 for failing to register and you're meeting the registration threshold. The other consideration is on the issue of ATRs. Remember we said that people who are supplying taxable services or products are supposed to issue what we call as tax invoices. Yeah. So in this case, for you to be able to generate a tax invoice, it might be necessary for you to issue an ETR, and for you to be able to issue an ETR, you must purchase an ETR machine. So, and this obviously adds to the cost implication, or rather to the administrative burden that we talked about. Yeah, because ETR machines, I think I've seen, they normally cost in excess of 30,000 and above. Yeah, so this is also another requirement that for you to be able to adhere to VAT regulations, you must have an ETR machine. Although there has been a lot of confusion on this issue, given that we had what we call the tax regulations of 2017, they sort of brought a lot of uncertainties in terms of VTRs, because the act sort of said you, as long as you can issue an invoice that says tax invoice on the top, and you've shown the person you're issuing the invoice to, then you might be good. But then they have added another catch that invoice must have a serial number. Yeah. So when we talk about now the serial number, you find that you might need an ETR, or what we call an ESD, to be able to generate a tax invoice. So it adds to the burden. It increases the cost to the taxpayers because of having to buy these ETRs. I think that's all on VAT. Maybe before, sorry?
We can be concluding, please.
Yes, we can be concluding. Okay. Let me just take you very fast through corporate tax. There have been a few changes on corporate tax. The corporate tax rate has reduced from 30% to 25%. I think this has been in the news, and most of you have known. Then there has also been changes on what we call turnover tax. The rate for turnover tax has reduced from 3% to 1%. And also the threshold for turnover tax has been changed, so that people who earn between 1 million and 50 million will be required to do turnover tax. So actually, this is also a very important consideration for you, because I believe people who will have an income of 1 million to 50 million, they will not be required to do corporate tax, but then they will be required to do turnover tax on a monthly basis at the rate of 1%. The penalty for failing to submit the return has been reduced from 5,000 to about 1,000. As I conclude, I'll want to take you through withholding tax changes. One of the changes is withholding tax on reinsurance premiums. I know this has not affected the agents so much, but the representative in the House for some of the underwriters will note that whenever you're doing reinsurance, especially to non-residents, they will be required to do withholding tax at the rate of 5%. And however, this excludes aviation. The aviation sector has been exempted from this particular law. So, but then, as I said, this is only applicable to reinsurance companies who are insuring with non-resident. We also know that your commissions, as they are, have been subject to withholding tax at the rate of 10%. That has not changed. But then I would just want to reiterate that VAT has not come to replace withholding tax. Yeah, you'll be required to do both VAT and also withholding tax at the same time. And I think in my computation, I've shown how that is supposed to be implemented. So I think that's all from my end. I want to take a few questions before I hand over to William.
Thank you very much, Peter, for that very insightful conversation. And just to give a highlight to everyone here, can you now hear me?
Speak a little louder.
You can hear me now?
Faint. You're faint.
Okay. I guess I forgot that I was using my earphones. So
no, you're fine.
You can clearly hear me. Thank you so much. Thank you, Trevor, for that engagement. So, Bwana Peter, we really appreciate that very insightful conversation. And what I'm getting clear, and you can just guide me, is that the VAT is on the service we offer to the insurance, and it's not on premiums that we collect and all that. We are a service provider to the insurer. And so whatever service you're offering him, we charge him for VAT. So in our case, we offer brokerage or agency services. So we are being charged, we are charging the insurer for that.
Correct. That is the understanding. The VAT is not on the premium. It's basically on your service. The brokerage service that you offer is what we're saying will be subject to VAT.
So what you are saying, apart from the 10% commission, we ask from it depends on the various products you're selling.
The arrangement.
So in the events of the, let's say it's a general insurance of 10%, I should go ahead and charge you had two scenarios, and you said in the first scenario, if I charge you 10% of the premium, 10% of the premium, that is the commission I get, I should go ahead and charge 14% of the commission that I get from you. That is on scenario.
Precisely,
so
yes.
If the premium I got was 50,000, as you're saying, the commission I should get is 10% of that, which is 5,000. And so I should charge 14% of 5,000, which is 700.
Yes.
So I should invoice my the insurance 5,000 for the commission, which is mine.
Yes.
And then 14% of that commission, it becomes 5,700. Hello? Hello? I lost you. You can hear me?
You're fine. You're fine. We can hear you.
I think it's
yes. I think William has gotten lost. I don't know.
No, we had lost you, but we have gotten you. Thank you. So, Peter, we are saying my 10% of 50,000, which is 5,000, I should charge VAT on that service worth 5,000, which is now 700. So I should charge 5,700 in total. But the insurer will go ahead and do a withholding of their normal 10% of the commission, which is 500. So I'll go home with my 5,200. Basically, if I charge 5,700, but 500 will be withheld, so it becomes 5,200. Hello?
No.
Peter, we are losing you. Peter? Hello? Gentlemen, you can hear me? I think it's Peter who is getting
Yeah, I
lost.
think Peter's
Right.
frozen.
So, gentlemen, with my knowledge of tax, this is a conversation we are having that ideally, what has been happening as usual is that of the car premium, if I have a car and if I get a client who pays for a car premium of 50,000, what has been happening before is that I get 10% of 50,000, which is 5,000, but the insurance normally would withhold 10% of my premium. So if I get now, it will be 10% of the 5,000, which is 500. So I will normally, in the normal scenario before, I was getting 4,500. Is that so? I am being tempted to unmute everyone. I hope you will manage your background at the back because I want participation. But in Zoom, we have a number of very good interactive tools. If you want to comment, please, there is a place where you can raise your hand. Alternatively, if you cannot do that, you can switch on your video and raise your hand wherever you are. I can see you, and I'll be able to switch or I'll be able to unmute you. So what we are saying is that, sorry, I think we are having a different person. Sorry. Thank you. Peter, you're back. Your mic has a problem, Peter.
Yes.
Now you're back.
Yes, what about now?
Yeah, I can now
Okay.
hear you now. Just take us back to that slide.
Okay.
And I'll just request that we just focus on that one, and then we can.
There we go.
Yes. So you can make it as a presentation. So what has been happening before is that we are still using the example of the 50,000 premium that I got that the client pays, and I'm assuming I'm getting 10% commission. I think you have used 5% on your side.
Yes.
Oh, you're using 100,000. Sorry. Yes. Okay. The assumption
Yes,
is
100,000.
Yeah. Okay, we can use your scenario. So before this VAT new rule has come in, we are saying that we were paying a car premium of 100,000. If we have 5%, I will get 5,000 shillings. But normally the insurer will withhold 10% of my 5,000 commission, and I will get 4,500. Now, in this new law, the VAT is also coming in, but you're saying in our scenario one is that we will have the normal way. One, we are getting our commission of 5,000, but on that we will charge 7%. 14%.
An additional 14%. Yes.
Which is now 5,700. And then, of course, the normal is at 10%. You are not, the withholding tax still remains. So 10% of that 5,000 is 500. So what I will get to my pocket is the 57,500, but I'll have the burden of paying the 700 that I charge the insurance. So I'll still get back my 4,500 as normal. In a nutshell, what you're saying, we are just agents of the government to collect the 700 from the insurer, and then we take it to the government.
Yes.
Okay.
To collect and remit.
Yes.
Yeah.
Sawa. So I'm looking at whether there is any.
That is actually the interpretation.
Yes.
Yes, that you're just agents. Remember, I said intermediaries are not supposed to bear the burden because you're not the final consumer. The final consumer is the insurance company. So your role is just to act as an agent or as an intermediary. You pass that burden to the insurance company and you make the payment.
So a very quick question, and let me ask on behalf of the people here. Number one, you had mentioned that it's on, it's basically, it may not apply for agents who have commission income of less than 5 million. Yes? Hello, you can hear me? I seem to be losing Ronald. Ronald, your mic, please.
Yeah, I think Peter's frozen again.
Trevor, you have a comment meanwhile? I think I've...
No, I'm not sure about the 5 million.
Okay, the 5 million is basically the, on your service. So it's on commission and not on the premium. So if your income or your commission income is less than 5 million, then you're not obligated to collect on behalf of the government. But I wanted to pose a question on Peter, and Peter is coming back in. Peter, sorry for the disconnection. Peter, you're back. A very quick one so that we can switch to the next item. Peter?
I think he's frozen still. Is he?
He's coming to a different...
Oh, there he is.
Yes, I'm here.
Sorry.
Yes, I'm here.
Yeah.
Sorry about that.
A quick one. Now, I just wanted to switch to the next question. You're saying for someone who is receiving, just a clarification is that the 5 million is on your commission income and not premium, isn't it?
Not premium, yes, the
it's
commission
income.
income.
Because you are the one charging the service. On the service you offer
to the insurance company, yes.
I get you. Now, for this person who is receiving less than 5 million, that means he loses. Now that he's not collecting on behalf, then he will not remit. So he will will he charge in the first place?
He will not be able to charge because remember, the only people who are supposed to charge are the ones who are VAT registered. So the status quo will remain for those people. If you are below 5 million, nothing will change because you'll continue getting your 5% or 10 commissions from the insurance company, and there will be no additional VAT obligation other than what currently exists in terms of withholding tax. But then there's no additional VAT obligation.
Will the government be losing on that?
The government will certainly be losing because there's no VAT being charged. But then again, remember, they are the ones who said these are the rules. So if they said the rules are like that, then the government will definitely lose, but will not have gone against the law.
Okay, thank you for that. The final question is, this applies for, of course, the businesses, we are coming in different phases. One can be, you can be a sole proprietor. So some are coming in as limited companies, some are in partnership. Can you speak to those different types of organizations?
Yes, actually in terms of VAT, the registration status, or rather the way you're incorporated, whether as a sole proprietor, as a partnership, as a limited liability company, it has zero impact in terms of VAT. So even sole proprietors who will be doing business worth 5 million and above in terms of commissions, they'll still be required to do VAT. And the same will apply to limited companies, to partnership, and any other form of business registration. So it really doesn't matter on how you're registered as a business, VAT will apply across the board.
Okay.
Yes.
Thank you. So I think there's a bit of relief of the few people who do not reach the 5 million income, but of course our prayer is that we will grow our wealth so that we surpass the 5 million. There are some who are beyond that. There are some who are not beyond that. So for them who are above that, this law was passed on 25th of April last month. So is it effective? Does it mean this 20th we must submit if you are above that 5 million?
The next, of course, we'll give a small allowance of the 2-3 days for implementation purposes. But at least for the month of May, whenever you're interacting and raising invoices to your clients, you need to account for that VAT and remit to KRA by 20th. Yeah.
The nature of our business, we don't, except for brokers probably, for agents, since you're acting on behalf, you don't actually raise an invoice. When you collect a premium, it is just charged on your account and you receive commission at the end of the month. Now, in this case, most of the agents, especially those who do not receive premium on behalf of the underwriter, they just collect a check in the name of the underwriter and they deposit and that's it. Or even the client pays directly, and for you, it's just wait at the end of the month to be sent some. So does it mean that the underwriter will we don't raise an invoice? So how do we then net off these things?
I think now this introduction of VAT changes the way you've been doing your business. I know for sure, and I think I've interacted with a number of agents, and of course they tell me they don't raise invoices. But now with the introduction of VAT, then it might be necessary for you now to raise invoices to the insurance company, because remember we said that one of the requirements is that you must raise a tax invoice. When you're VAT registered, it doesn't matter the nature of your business, but you must raise what we call a tax invoice. Yeah, I know there has been those arrangements whereby the underwriter pays at the end of the month, but I think now there will need to be even closer collaboration between the agents and the underwriters, so that the agent can be able to raise an invoice at the end of the month, showing that this is all the business we've generated for you, this is our commission, and you need to pay us together with an additional amount of VAT, which is 14%.
Okay.
So it changes the way you're doing your business.
Yeah, I know there are a lot of questions that are coming in, but we need to manage also the time. I'll just read through very fast. There is Peter who was asking, Edward was asking whether it's on premiums or commissions. I think we have clarified that. That 5 million threshold is for commissions that you receive.
Yes.
Jackie, I think you've responded. Festus also, I think we have responded to that question. Honorable Nyangwansa is saying, meaning if the burden of VAT is not passed on the insurance, we shall bear the VAT cost. Government,
yes.
Okay. I think that is a comment that is saying if the burden is not, basically what you have said is that the burden, you know, we are the ones who are supposed to submit, but it is charged on the insurance company. But
the
for
insurance
us,
company,
we have to file. But for us, we have to file. So
that is
that is a clearance that in the scenario 1 is that the insurance which is bearing. Scenario 2, I think you had mentioned that what if it is not the insurance who is bearing, then it is us who will bear, because the commission that you are receiving, the 5,000 is already inclusive of VAT. So it is submit it.
Yes.
So it
that's
will
correct.
reduce by some 500.
Your earnings.
Okay.
Yes, that's correct.
Thank you. Then we have Francis Olo, who was asking, VAT is consultation offered to underwriters. Yes, very clear. That is basically the service we offer. You are a business by yourself as an agent. You are offering a service of selling and client management with the underwriter, and so you charge them for that service. I hope that is the position, Peter.
Yes, that's the position.
Yes. Adelaide says, are we now mandated to set up a VAT obligation if not before? So if you are above 5 million, you should be able to go to your KRA iTax and enhance your iTax obligation, VAT obligation to be enhanced.
Yes, that's correct.
Okay. Ruth says insurance is not vatable, so insurance, sorry, the comments are coming very fast. Ruth is saying insurance is not vatable, so insurance companies cannot pass this to the client. This means insurance will have to bear the burden. I think we had clarified on that.
Yeah.
Sharon asked, I thought 5 million applies to annual turnover. The VAT should apply to all agents and brokers. So then we are saying, I'm trying to get what Sharon means that basically it's a turnover, Sharon, as you say, and our turnover is basically our turnover in this case is our commission.
Yes.
The income that we receive. So it applies to agents who are above that 5 million. Your turnover as a business of agency is basically commission. I hope that
commission, yes.
That.
Precisely.
Yeah. So I'll allow offline, Andrew Nyangwansa, you will respond on the issues of how do you register for VAT. I think now Ronald will share his contacts and be able to
that.
So we will have this conversation. Much appreciation, Peter, for this conversation.
So thank you.
Yeah.
Yeah. Thank you so much. As it has been a privilege for us to be able to interact with you. I know there are a lot of questions which you may not be able to answer during this forum, but you can reach us on the below email address, peterim@ronas.co.ke, or even on the telephone number listed down there. And then we can be able to interact more and give you a solution to whatever issue you're having. Thank you so much, and have a great afternoon.
Just one, so that I do not become the only person who is speaking. Jackie was raising their hand, and I know we have closed on this, but Jackie, please, very quickly, if you can just ask very fast so that we can move to the next topic. Jackie? All right, seems it was in error. So again, much appreciation. Peter, please you will share with us the slide, and we will be able even to get the contacts with you. But we really appreciate for this conversation. We believe we will engage you as our tax expert, as our accountant and financial expert.
Yes.
Thank you, Mark.
Thank you, William. Thank you. It's been a pleasure.
Thank you. All right. Ladies and gentlemen, that was quite engaging, and sorry, this conversation is so rich. This conversation, we cannot even finish it. I'm not sure why we had 3 topics at the same time, but thanks, Cliff, that you could do this. But I want us to move very quickly now to the conversation of the regulations. The IRA shared some regulations that are there to respond and to engage on the issues of the COVID, how to respond to the COVID. And allow me just a minute to navigate on my machine and to get to these regulations that were shared. So just a minute. Let me just go to the regulation so that I can share and we can discuss together. So our guest, I'm really grateful that you have been with us. Sorry that the conversation is taking long. I hope you had dedicated some good time here. Elias is an actuary with IRA, and we really appreciate his service to us as agents and being able to learn a lot. So Elias, I hope you are still here and you can give us some 15 minutes even as we do this.
Yeah, thanks, William. I'll try and make it shorter because I think the time is not on our side.
Yes.
At the same time, we want to ensure that we give more time for questions. So I'll basically make it 10 minutes so that we can get the other few minutes to do the other things. Now, as we've indicated and as per my introduction earlier, we work at the Insurance Regulatory Authority, and our work is to ensure that we ensure that the market is stable, and also we develop this particular market. So most of the time, people look at regulators as those guys that only come to make laws and to make the market a bit tighter. But if you look at different jurisdictions across the world, IRA Kenya has a very unique role in a way that it does both protection of consumers, ensuring there is stability in the market, and also developing that particular market. And that's why you've seen we've been taking a big role in towards training of agents for the last couple of years throughout the country. I'm indicating that we've managed to train agents across the country. We managed to create insurance champions across the country. We've initiated a very, I would say, elaborate plan to harness innovation. And in this particular case, we are going to initiate Sandbox next week. And this basically gives an opportunity for all of us to see what kind of innovations can come through the test environment. We have also going to, as you are aware, we've initiated the microinsurance regulations, and that really provides an opportunity to bring in new products going forward. Now, COVID-19 has really brought in a number of impacts across the world, and is not only. And I've seen someone saying that the volume is not clear.
Sorry, we are losing you.
Hello?
We are losing you.
No, it's a miss.
Elias?
Hello? Yes, am I now audible? I've seen
Yes.
someone writing on
Yes, yes, we can
that
now hear you.
I'm not a bit clear, so I
You're
hope
now
that
clear.
now I'm a bit clear.
Yes.
Yeah,
you
so as I was stating that the impact of COVID-19 has been having a very tremendous, I would say, change in the way different processes, different businesses, and different societies. So it has really impacted from the top to the end of the entire human society, financial systems, and all that. So this really brings a very, I would say, interesting moments, particularly to a sector that is deemed to protect against these particular risks. So the insurance sector really plays this market, and not only within this country, but across the world, to navigate this particular season. So we've seen that there are various impacts, and that has been experienced in Kenya and across the world. And those particular impacts look at a number of things, from the operational standards, financial standards, reputational standards, to the strategic of different ecosystems. So just as a starting point, one thing that I know most of us will have in mind is that why is it that this is only affecting the insurance companies, the brokerage, the intermediaries, and the other service providers? But the reality is that the potential impact is on everybody. So for instance, just to look at the potential impacts on supervisory authorities, in particular authorities such as IRA, you'll be able to see that we have different impacts towards enabling these particular environments. So we've seen that the authorities such as ourselves have been impacted on the operational and reputational facets. So you've seen that we've gotten over 80% of our staff working from home. We had to cancel meetings and engage virtually with our stakeholders. We have to build our resilience in ICT infrastructure, and also we have to worry about things such as cyber and cyber risk and fraud. So in this way, we've seen a lot of impacts on the strategic plans and work programs that we have been undertaking as a regulatory authority. With that then in mind, then we also need to look at how do we support different some of our customers or all of our customers. So there are different implications within the insurance sector, and those would run across impact on several lines of business. So for instance, travel insurance and event cancellations. We've seen business interruption insurance and that particular line of business highly impacted. Life products highly impacted across mortality, health insurance, a very big impact. Also looking at the balance sheet, the economic impact because of the global interconnectedness within this particular world. Then there's also need to look at how the balance sheet scenarios have been impacted. On risk and solvency assessment, quite impacted around stress and scenario testing. Insurers also had to think about operational resilience in terms of business continuity planning and the threats that basically come out of the cyber risk. So with that in mind, then it was quite important to look at the readiness and the resilience of our of our sector. And what basically comes in mind, and what you've seen, is that we had to provide a set of guidelines. And these particular guidelines were harnessed around ensuring that our system, our insurance system, is ready. Our insurance system has developed the level of resilience that will make it possible to address and manage these particular risks that are coming up out of this particular pandemic. So we've seen that we've provided a guidance note that really highlights the importance of creating that resilience, the importance of really looking at how customer care services are looked at towards enabling this particular market to remain favorable to the people that are basically being impacted by this particular virus, and also enabling it to be possible and able to go through this particular season.
Hello?
So if you look at that particular guideline, you'll be able to appreciate that it looks at a number of areas. One of the areas that you'll be able to see that it kind of brings out the area of customer focus towards ensuring that we still remain an industry that is customer centric as we go through this particular pandemic. So various issues that have been raised in terms of how then do you ensure that customers are aware of what coverage, what policies that they bought. Is companies going to basically have a discussion and kind of elaborate what these particular products are and what do they entail to that particular area whereby you are looking at in case there are claims that are arising out of COVID, how do we quickly respond to them just to ensure that customers get their claims addressed quickly as possible, to the point of creating business continuity, whereby we are looking at companies really having people in case there's an impact or someone has been affected by that COVID, there's a team that ideally takes continuity of key persons and key processes within the organization. To a
Elias,
point
that
of
was very
really
Sorry, I'm saying
requiring.
that was quite interesting. Elias.
Yes.
Hello. I'm saying that was quite interesting.
Yes.
You anticipate deaths of the, the managers of these companies, or you are avoiding any risk of whatsoever. So that is just take care of in the event the leadership is wiped out by COVID.
Yes, and you see, if you look at this particular pandemic,
Yeah.
It's something that you don't know where it will arise, and even here at IRA we have proper procedures in case someone has been affected or infected. Really, what do we really do immediately to ensure that we still continue with our operations? So within the
Just
business
a quick one to
continuity
ask: have they
plan.
Sorry,
Kiriba, you're not clear. You're not clear.
Oh, how about now? You can now hear me? Much better?
Mama. Yeah, sure.
Hello, you can now hear me? Wonderful.
Yes, you're clear now. You are clear now.
Yeah,
Hello.
thank you. Yeah, Elias, we can hear you. I was just interrupting, and I was asking, has this then been? Have you had the response of the underwriters now having, presenting their, their succession plans?
Yes, we have the succession plans have been provided with a list of the key areas that we needed to have plans on. We have a guideline on business continuity, and most of the time, if you look at the way most companies are designed their business continuity across the world, not only in Kenya, most of the issues were not adapted to a pandemic scenario. And the developed countries have been really trying to walk through the dark to see what is right and what is wrong. And ideally, it means that some of the business continuity plans, not only within organizations, but also with the different governments, could not anticipate this particular pandemic. So we had to look at how then do we adapt to the pandemic scenario within these particular BCPs. And you see, what really happens is that,
Sorry.
can I call them?
Sorry, we are losing you.
Yeah, can me?
Yes, yes, yes.
Yeah, so I'm saying pandemic scenarios highly differ from natural catastrophic scenarios because of their long-term nature and in terms of how insurance risk management and internal controls are looked at. And that's why ideally you have to anticipate and tell them, okay, if this happens, who basically goes and takes charge? So succession plans are extremely important. And that is something even you guys who are operating corporate agencies, you need to have in place. So assume that you are impacted by this, who basically runs and goes with business when you'll be in quarantine and you have to spend a number of days so that you cannot really do that. So ideally, health and safety and remote working is some of the things that we've requested companies to do.
Yes.
I've seen companies doing what are split team operations and use of teleconferencing, such as what we are using now. And those are the areas that you'll be able to see was kind of highlighted and picked up in that particular guideline.
Now to the client, sorry.
Now,
just speaking to the client.
And yep.
Sorry, just speaking now to the client. Sorry, just go ahead.
Yeah, now for customers, you know, there are also different exposures around the customers' welfare. And one thing that you've seen is that some people have gone ahead and lost their jobs. Some people have basically reduced salaries, and maybe in the next month, maybe they won't have a salary at all. And with that in mind, then you'll see customer-focused solutions need to be developed within the insurance industry. And what you've seen, we've provided a number of ways in which companies can think through that particular process from the point of just providing installments payment of those particular premiums to the point of whereby in case there is someone who has lost a job and instead of lapsing that particular policy, is it possible to provide what basically we term as a premium holiday within that particular period of this particular person that have been impacted with this particular pandemic? Some people still do receive their salaries, and in this particular case, they will still be able to potentially pay for their insurance. And ideally, what we are saying is that you need to look at those particular scenarios. So the people that sit at a focal point of understanding what these particular customers are going on are the insurance agencies or the agents, because they're the people who would ideally tell if I can't really pay for the premium. The insurance company stays in a particular building. The person that is always walking through and basically discussing with these customers are the agents. And ideally, they would be at a very clear position to know the level of impact what the customers are facing and how many of them might really require some level of protection at this particular period so that they don't need to have their policies lapsed because of failure to pay. So some of those things really look at how then do we potentially reduce the discontinuity of the insurance services that we are providing to these particular clients. Also, out of the business of financial soundness and business resilience, you've seen us requesting companies to conduct some form of stress and scenario testing. Now, again, most of the stress tests and plans that have been set by companies could not ideally potentially look at pandemic scenarios. And most of the time they will look at operational scenarios, catastrophic scenarios, because I can tell you, no one thought of, if you look at the flus, the 50 flus and all that kind of things, this thing happens after every 100 years. The other one happened in 1918. This one is 2020. So ideally, that scenario is something that needs to be looked at. How does it really impact businesses? So the negative impact also comes through, whereby there'll be increase of claims in particular lines of business, where losses are related to a pandemic and where they were not excluded. Now, in that particular case, there are two different things that would arise out of that, either increased litigation and reputation of the insurance sector. And what we really needed to ensure is that we don't expose and basically create a reputational aspect around our financial system. So we have to look at how then do we potentially help and assist this particular sector in terms of addressing some of these particular risks. So just to reduce the potential increase of lapses of policies, you'll be able to see there's a response around that, just to ensure that we look at issues around reputation and potentiality of systems. We have to ensure that we provide some guidance around the scope of coverage and exclusions, whereby companies have to talk to their clients around that. And ideally with new products or changes of products, we wanted to have a look at that, just to ensure that we continually treat our customers fairly, so that a company doesn't just end up changing and providing and including exclusions, given that this pandemic is here now with us, and someone just wants to just have a clause just to protect themselves, and that will be quite detrimental to the well-being of their policyholders. Now, over and above that, we say that those need to look at ways to support different persons within the sector. And one of the things that we wanted the insurance industry also to look at the ways to support the intermediation process. And this support would include providing a platform for you guys to operate, given that now we are looking at social distancing, reducing areas I'm paying. Nalipa najua ni 10,000. Niambie balance.
Elias.
Niambie balance.
Hello. Hello.
Yep, can you hear me? Hello.
Yes. Hello.
Hello, can you hear me?
Yes. We can hear you.
So,
we can hear you.
So I was talking about the support, and ideally, what you'll be able to see is that there are various ways in which this can be done, and this can be within the consultation of the companies and the agencies. I can tell you, one of the things that we wanted that immediately you get your commissions paid whenever business has been transacted, and that commission can be paid through channels that follow all the government directives, be it digital channels of payment of those particular commissions, to the point of basically providing a platform for you to continually sell these particular products. Now, one thing that basically comes in mind is that sometimes I think people just want to go through very absurd ways of doing things, whereby I thought that some people went and started asking for loans. You know, insurance company is not a bank whereby you can go and ask for loans. So that is not what the support that we were talking about. Ideally, there are ways that you guys can look at ensuring that you continually provide your service, and also look at ways of enabling the market to be at a position to rise at this particular period to be that particular flagship sector that provided a service that after COVID, people will say that really the insurance industry managed to address some of these things. So just to conclude, and this is just a way of looking at what really comes ahead. COVID-19 and what we've been doing as a sector is to ensure that we adapt to COVID-19, not to basically be talking about post-COVID as an insurance sector. We're looking at ways to adapt to this particular situation. And what that really means is that we have to continually look at ways that will be innovative, ways that will bring in policy shifts that will enable our industry to transverse this particular pandemic. So you'll be able to see innovation will be at the forefront. And this basically tells us that if we refuse to innovate in the past as a sector, then this pandemic will force us to innovate, whether we like it or not. You won't be waiting to go and meet your customer they used to have coffee at a joint somewhere as you receive the premiums in cash. Right now you have to think about, do I have a platform, and do I still have to engage with my customer, and how do I still engage with my insurance company going forward? So I'll stop at that. So let's enable firms to, ours is to enable firms to manage and assess the impact of COVID-19 and take care of our customers, who are very much important. And that's the reason why we're having this discussion. The reason why we're having this discussion is that particular customer that is outside there. It's not about IRA, it's not about the agency, it's not about the insurance company. The reason why this particular industry is existing is because of that particular person that gives you some premium for protection of a particular risk. And one thing that I've noticed is that this sector has so many competitors. You compete with the witch doctors who provide some form of protection. You compete with pastors who give some protection. You compete with those guys who write things on the streets that ukitaka kusaidiwa kukinga boma. So insurance has so many competitors. Your competitor is not that next agency. Your competitor is not that next insurance company. Your competitor basically sitting with a pot somewhere and producing some funny gadgets for protection. Thanks, guys.
A very quick one. Thank you very much, Elias, for your review on how the regulations, one, attend to ensure that the insurance companies as a whole, one, they do not, the stress testing and checking of the insurance governance, one, but also the liquidity and the stress testing of the institution, they are still very solid, so that it doesn't affect the premium payment. But also you've talked in regard to the client, how is the client attended to? You're also talking about the, the agents, how is the business still to continue? But I would want to look at, in some of the guidelines that you indicated, if you may allow me, just let me refer to them. There is the issue of premium payment. It can be deferred and all that. And from our space, we understand that sometimes if a premium is deferred, then that exposes in terms of the claim experience. If my client had paid, let's say, part of the premium and has not fully paid, then in the event of a claim, then the insurer might not be able to take up that because he'll say it is not yet fully paid. So how have you been able to put a balance between premium payment deferment versus a claim being paid? Because a premium payment deferment means a breach of the contract. So how have you been able to ensure that regulation does not affect the client? But also, just answering, but also, sorry, let me put them in two. But number two, also, the premium defer payment also affects the agent, because the agent is only paid when the premium is fully paid. So that affects the client, one, because they are exposed in terms of honoring their claim, but also to the seller, who is the agent, because they will not be paid until it is fully paid.
Now, if you look at different insurance products, there are different ways of addressing the deferral mechanism. And ideally, if you look at particular life insurance products, there are different clauses on how premium payment is considered. And we have what we call a grace period, which basically some products have 1 month grace period, some have 2 months grace period, and all that. Now, when it comes to the payment of premium and the claims, right? You need to look at in this particular sense. If you look at the way the claim experience has been after this particular pandemic, I would tell you that the claim experience has ideally highly reduced, because people are not really exposed to so many extreme risks that you've been seeing in the past. And secondly, some person will argue that, look, these premiums that are paid is what we are going to use to pay claims. Now, insurance business is quite interesting. And if you get a company saying, okay, I cannot be able to pay claims because I've not received premiums, you need to ask where is the technical provisions, where the reserve, because that is not what really happens in the insurance business. This is not a bank whereby you collect and pay. We are working in an industry whereby an insurance company should be able to build their reserves. And once you have built your reserves, that is where you are going to pay your claims as they arise. Now, if you look at the insurance process, the actual process, whenever there's a deferral of premium, the first impact will be on the reserves. Now, in terms of the sufficiency of reserves, it's something that we take with a great cognizance. And what basically happens that the company needs to look at what is the level at which their current reserves can sustain any deferral in case there's a claim that arises within that particular period. So we are not running an industry whereby if someone does not pay claims, someone does not pay premium today, I'll not be able to pay premium today. That means that that company doesn't have reserves. And as from where we sit, each and every company maintains a particular level of reserves. So we have to have cognizance that, look, we have different levels or different types of products that call for different ways of looking at the grace period. And we kind of advise that at least you should offer at least 3-month grace period, and that highly affects or impacts life business. The second thing is that if there is deferral of premium, right? How will I get my commission? Now, interestingly, if you look at what happens within the sector, when someone pays his premium upfront, you get your commissions upfront, right? Now, when it comes to the accounting of the insurance business, the commission that you get, do you know that the insurance companies set a reserve, assuming that the person will lapse that policy? You have already gone with your commission. The person has lapsed his policy. The company has to go and dig from what we call unearned premium reserves based on the commission that he had already paid for you for that particular business. So if you look at the process of the insurance business, I think we have to run away from this mentality whereby we think that insurance should work as a bank, where money comes in, money goes out. Insurance business is a very unique business. And for each and every component within the insurance business, there's a component of a provision that has to be held when that particular component is being actualized. So for instance, when there will be deferral of premiums, as an actuary, basically, let me put the talk as an actuary, we have to look at what provisions we need to set up for that particular case. And what really happens that you need to look at your risk appetite within that particular component, so that as you are providing deferrals and you are paying some commissions, where maybe if that person was supposed to receive commissions, and maybe you have to still settle that, or maybe discuss with the agent that this particular person is not paying at the time, and maybe once he resumes to pay, you will still get your commissions. Those are the discussions that we should be able to discuss between companies and agencies.
Yeah. I want to conclude your session with a polling just to hear what people are saying. So allow me to launch a polling that has 4 questions that basically speak to the regulation issues. So on your screen, gentlemen, ladies, there are some 4 questions. Please respond to it in regard to claims management, premium collection, commission payment, and finally, deferral of premium payment. So please respond on that screen. Just tick yes or no on what we are saying. Is that on the regulation, claim management have been affected as a result of COVID? Yes or no? So please participate in that polling. I'll just give some few seconds and then we move on. Are you with us? Hello? Yes, thank you. I can see people are participating. I want us to move a bit fast.
I hope guys have not run away.
No, they're here. They're here. Actually, I already have 4 people who have responded. Let's move very fast, and then we can invite Daktari. Daktari, thank you for being very patient with us and walking with us through the conversation. It's a rich conversation. It's very engaging, and so we have taken your time, but we hope we haven't stolen you from Daktari. So people are progressing. I can see 10 people who have participated. Then so Daktari, we're just finishing on this. And then once you respond to this, I'll allow Elias to just give his final remarks. Elias, you're with me?
Yes, I'm with you.
The results coming in from the polling stations, people are saying claims management have been affected by COVID. This 90% of the people here are saying yes, they have been affected. Premium collection has been affected as a result of COVID. Yes, indeed it has. 75% suggest so. Commission payment by insurance have been affected as a result of COVID. 67% agree with this. And my underwriters have considered a premium deferral. Only 33% are agreeing to that. 67% say a no. So it seems like the regulations need to be engaged further in terms of claims management, because if claims management are affected by COVID, then we would expect, as you have earlier mentioned, the claims experience is much lower. So we should be able to see, as you say, the turnaround for claims payment should be very fast. I saw it was, is it for last expense and all these others? There should not be a reason for rejecting claims. So probably those are some of the notes we can take. Premium collection also has been affected. Of course, the client is affected in terms of their cash flows. So we appreciate that, but we hope there is a way that we can engage on that. On commissions, again, I'm seeing 69% of people saying it has been affected. Some have been delayed. So it's something that probably once this poll comes to an end, we can be able to share our thoughts after this. Underwriters have considered premium deferral. Very few. More people are saying it is no than yes. So of course, it is good for us as agents. We are not, but to the client also, it's something to think about. So probably I can end this poll so that we can now move. So I'll share the results. Elias, much appreciated for your expertise, for sharing the guidelines of IRA and how you have intervened. And so far, yeah, we can appreciate the efforts that have been done. And we pray that it will not just be in the present, but you're looking at the future of insurance and how the regulator is able to engage so that the insurance grows. COVID should not decrease should not make the insurance to decrease to probably 1%. We should be seeing at how it can grow to the next level. And the people who are to do this are right here with us. The agents are the movers. They are the people who will go out and have the conversation. In terms of education, yes, you have mentioned that you have had a lot of education, but may there be interventions to see how we can reach out more to education, because we are the agents of education to the community in this regard. So much appreciated.
Just to say something, just to conclude, is that very interesting. Just today, we've just approved the first free COVID insurance product. whereby they are going to give general public a free cover for COVID by one of the insurance companies. So as some guys are running away from COVID, one company has decided to offer a free cover for COVID. And so we want to see how it goes. I know that will be in the media very soon. Some people are taking it as an opportunity. Some people are seeing this as an area of claim. And one thing that I can tell you, the way the government is handling COVID and the number of measures that the government has taken in terms of even providing a facility and all that. What the industry should be able to do is how then do they collaborate with the government to show that to basically be part of solution, given that if you look at how everything is being managed, it's highly focused within the government. And with that, then what we really need to do, we have over 600 cases now, around 29 or 31 deaths or so. So ideally, if you see a company saying, okay, fine, why can't we give a free diagnosis benefit for general public? That's very tremendous, because even if they paid for those 500-600 people, it will not be a lot of money to basically be paying for those kinds of benefits. So we are having we are in a very interesting period, and anyone who will see this as an opportunity will be able to create a reputation that can ideally push this particular sector to the next level. And that is it. We might call that we need to continually educate and push for penetration. Penetration maybe will come out of the response that we'll have towards this particular pandemic, because it has basically changed the way we look at businesses, the way we look at the economy, the way we look at the social fabric. Nowadays, even if you are meeting your brother, you'll have to put him at a meter away. Previously, that was not the case. So ideally, let us use this as an opportunity. Let us innovate, and let us see how we can enable this particular sector become responsive and adaptive to COVID-19. Thank you, William.
Thank you very much, Elias. God bless you, and we look forward to engaging even more and more. Ladies and gentlemen, we've taken this conversation very, very candid, and I'm happy for the questions that are coming in, both on this chat, but also on the WhatsApp. As we conclude with a bang. All of us are business people. Everyone is in business. As an agent, you run an agency, you run a brokerage, you run your business, you have your client portfolio, you have your team that you work with. And as you run this business, this COVID season has really affected you, both from the revenue aspect to the cost management to, as an entrepreneur, you have obligations by yourself. You have obligations to pay your salaries, to pay for your rent, to pay your team, administrative costs, and all this. How do you navigate through the storm? How do you sail through this storm? And you, as the leader of that business, in a book by John Maxwell, The 21 Irrefutable Laws of Leadership, he speaks about the law of the lead, that the business effectiveness can only be, it can only be as far as your leadership capacity. So if I use this bottle, for example, the water that can come to this bottle is only 500 millimeters. So if I have 1 liter, then it cannot, so it can only be this much. So how are we in this season of COVID reorganizing ourselves, reinventing ourselves so that we can be the leaders that will grow our capacity even for the future that is ahead of us? So we are now looking at the future, and with us is a very special guest, Dr. Nelson Kuria. Dr. Nelson Kuria, again, I've introduced him again and again. He is an expert. He is a guru in the insurance industry, and he has a wealth of experience. And I would want to invite Kuria. Thank you very much for joining us. And very quickly, to introduce you is to allow you to just share to us a message of hope, because we're in business and we feel like we have been hit hard. What is your opening remark to this entrepreneur who is a bit lost and wondering, what is the next? How do I navigate? How do I sail through this storm?
Well, thank you very much, William, for this opportunity to interact with the insurance professionals. Quite a number of who I know, and I'm glad to see them on this screen. And a very, very, very important subject. And let me say that I'm so happy that you have come up with this facility to continue engaging and enlightening members, your members and other players in the insurance industry about matters that are on hand, particularly this matter of COVID-19 that has really affected us and ravaged most organizations. And let me start by echoing what Elias has said. And I'm very happy, you know, the way Elias from IRA engages. He just doesn't engage as an actuary. He has a real command and understanding of this insurance business. There's something he has talked about, long-term perspective and nature of insurance business. And I think that's where it all starts, that insurance business, as opposed to banking and other businesses, has a very long-term perspective in terms of the way it operates, in terms of the way they structure and organize themselves. And that does not exclude even the intermediaries, because the intermediaries' nature of operations will also be dictated by the nature of the industry. And I remember what happened after the political violence 2007, early 2008, and I remember to echo what Elias has said, that time I was just about to become chair of the Association of Insurers, and I remember as the CEO of CIC, I looked at the issue of political violence as an opportunity to reposition insurance business and as an industry, even before I thought about CIC. And I said that rather than run away from paying the claims from the political violence just because they had not been covered, I thought that was rather a self-defeating approach, when as an industry we had an opportunity to reposition ourselves in matters of standing with our clients at a time of need, and even to show and demonstrate that insurance truly pays. There are many of our clients who have held insurance and had held insurance for many years and had not claimed. And then at this hour of need, you turn your back to them. It is self-defeating. And I remember standing up and saying that for CIC, we were going to settle those claims. And we were not even going to settle them in part. We were going to do the normal loss adjusting and the assessment, and we were going to pay the claims to the full tune of the loss. And that is what happened. And what happened after that is that it earned us a lot of goodwill with the insuring public. And actually we had a near avalanche of walking clients. And thereafter, we really enjoyed a very good reputation in the marketplace. And that is just because of that one act that took a long-term perspective, that we would rather lose a bit by paying those claims, but enjoy a better reputation and image that will bring a longer stream of income even in the future. So I want to echo and completely agree with the position that Elias has taken in this matter.
Yes.
In matters of the intermediaries, I want to say that personally, I have been very passionate in terms of engaging with intermediaries, growing them. And for those of you who may know the history of CIC, when I got to CIC in 1998 June, as chief manager in charge of business development and strategy, I went to an organization that was not intermediary friendly. As a matter of fact, CIS then was doing very little business with the intermediaries. And what I did with my experience, having come from Kenya National Assurance, that was more, intermediary driven in terms of acquisition of business, was to establish a culture of working and developing very strong relationships with agencies. And for those that know what we did to transform CIC, the intermediaries were part and parcel of the transformation of CIC. And something that I'm very proud of, that we got them into the fold, worked with them. Some of them I started with were bringing premium of about 5 million in a year. By the time I left CIC, some of them were bringing business of 100 million, because we grew with them. And what happened is that we invested in the growth of the intermediaries in terms of capacity building, in terms of engaging with them, coming up with the promotional campaigns on quarterly basis, half-yearly basis, on an annual basis, and even at times getting them trained in seminars, not only insurance, but even how to manage themselves as individuals, how to take a professional approach, a strategic approach into the way they did their business, and even about their own health. And I remember some of the agents coming back to me and telling me how we assisted them even to know themselves. So for me, the insurance industry can never be complete and can never be effective without effective intermediaries. And I believe that is why we have not been able to tap the full potential of this industry, because we have not invested properly in the development in terms of capacity, in terms of motivating the intermediaries. And I am happy with the IRA and what they have been doing in terms of developing the capacity of intermediaries, but there is a lot that needs to be done even by the underwriters and other players in the insurance industry. What I want to say is this, in short, because we don't have much time. Pandemics, catastrophes are always going to be with us. It is only that we don't know when they will come, but they will surely come. And we must take this as a way of cycles in business, as a way of cycles in our lives, and prepare for them, because surely they will come. Today it is COVID-19. Maybe some years down the line, it will be another thing which we don't even know the name. It will be another catastrophe, like we are having in other places, like now we are having floods all over. And therefore, these are things that we should be preparing ourselves for. And like I said, the insurance takes a long-term perspective. It is important that even agents, intermediaries, however small they are, also to engage in a strategic planning, a strategic approach to their business, and even at the very least, they should have a small business plan. It may not need to be so elaborate like for big or medium-sized companies, but like the Bible tells us, where there is no vision, the people perish. That pertains even to a one-man, one-woman business. It must have also a direction. You must know where you want to be in 5 years, 10 years time, even as an intermediary, as an agent, because you need to be growing. Like we say, if you are not growing, you are dying. And therefore, let's take certain positions and understand the nature of our business. that our nature of business is one of risks. And as agents, intermediaries, we must also lead by example. If we tell our clients to cover themselves, to cushion themselves by taking certain policies, so that they will be well protected in the event of such kind of calamities coming, how is it with us as intermediaries? Do we sell products that we don't consume? That we might even have our clients being cushioned and we ourselves are not cushioned. So let us take the mantra that we lead by example in terms of also cushioning ourselves as intermediaries from such eventualities because they are just going to come. The other thing I want to say is that the intermediaries, like Elias has said, have to change paradigm. This is something that I used to talk about when I was the CEO of CIC and even when I was as chair of ACI, that even the intermediaries themselves, they will need to change paradigms. What we have seen now with the COVID-19 is how we can be able to reposition our businesses and remain resilient because of technology. We have been talking about ICT-based platforms in the insurance industry because we have really been left behind by other industries, particularly the banking sector. So we need to up our game in terms of embracing technology. And Elias also talked about this as being part of innovation, that how shall we from now henceforth be servicing our clients using technology, innovating in the area of embracing technology. And this is where I want to give a challenge to the intermediaries, because it is expensive to acquire software, to acquire platforms and even hardware for you as a single intermediary. I have been advocating, and I remember when I addressed members of ACPIA another time, I talked about shared services. And because cooperative principles and mutuality is in my DNA, having led a cooperative, I understand the importance of shared services pulling together, because actually insurance is cooperative and cooperative is insurance, that's what we say. So we can come together as intermediaries, do what we call is called the shared services, getting common platforms where we can loop in, and therefore we benefit from economies of scale in terms of acquisition of such kind of platforms that will enable us to go online, that will enable us to go digital, but in a shared service, which also means shared cost. That will even enable us to bring in issues of accountancy services, like now, you'll be required to do certain returns even as an individual, employ an accountant. It is expensive, it is not feasible. But when we come together as a number of agents, even forming something like a cooperative, so that you have shared services, you acquire technology easily, you acquire those platforms easily, you can digitize much more easily and effectively, and that way you will be able to move with the times in terms of automation, in terms of you know, what do you call it, aligning yourself with the changes that are coming in the marketplace. So if there is nothing that you pick from me today, just pick the importance of shared services that can come by way of technology, that can come by way of even accountancy services that can also be looked into that platform, so that when you are doing those returns to KRA, when you have also to do your annual, an annual report, you are facilitated and enabled by this technology in terms of information processing. The other thing I would want to say is to challenge the underwriters that because of the very strategic position of intermediaries for business acquisition, it pays to invest in them in terms of capacity building. And I can say that money spent in terms of capacity building of agents is not money wasted. It is actually an investment that will enable them to grow. And as they grow, you also grow. And I talk about this from a very empirical point of view because this is how we grew CIC. As a matter of fact, intermediaries were, and in this regard, I'm talking about agents. There's more agents that we grew up with actually defined our business model, that ultimately our general business, over 60% of it was actually coming from agents. And that's why we had a very stable portfolio, because our portfolio was not given to fluctuating because of going for big ticket businesses that are commercial where you have big brokers. So if you don't keep that business of 1 billion this year, tomorrow, next year, it creates a big hole in your premium income. So for us, we took the model of widening the scope in terms of having as many, bringing business into the pool, and ended up with a more stable portfolio in our business. So I know the power of intermediaries. I know the potential that they can unleash out there in the marketplace if they are enabled. And I want to say that I'm looking forward to the days, because even with the technology, there is still a place for an agent. Don't be cheated that agents are going anywhere. The only need that they need to do is to re-engineer themselves. The way they operate, the way you organize yourself as a business, you must change paradigms. But the agent is not about to disappear. If anything, if they are able to reposition and re-engineer themselves, they will even play a more pivotal, a more critical role in terms of increasing the level of penetration in our insurance industry. So for today, I just want to echo the fact that I do recognize the importance of intermediaries in tapping into that potential that we have been talking about. And therefore, even the government needs to come up with an enabling environment that let us look at the big picture of insurance. Let us not just look at it today and the little that we can get from this VAT, from this withholding tax. Let us look at what would happen in terms of quantum growth in premiums, and hence that money being reinvested in the capital market, in the bond market, and financing our infrastructural projects. And this we can, if we unleash that potential, increase the penetration by enabling the intermediaries, the procurers of business to be able to go to the market, even to the bottom of the pyramid, and get that insurance that is there, which is just there, but it is not yet, we have not gotten it. So we need to come up with, let us have an abundant mentality of how we can grow this cake of premium in terms of large quantums and benefit from that kind of funding to our infrastructural projects, rather than this little money that we are going to get by overtaxing intermediaries. Let us look at what we can get, from that, unleashing that potential. Can you imagine if we were to double the level of penetration, what that means in terms of quantum of the growth of premiums? And then look at that premium coming back to be invested in the capital market, going to government boards. Maybe it would have even been enough if we had done enough work to grow the insurance industry, even to finance our SGR. But there was going to be other infrastructural projects that we can invest in. So let us look at insurance from a long-term perspective. Let us look at it from an abundance mentality in terms of enhancing the level of penetration, because that's where the bigger benefit lies in terms of the quantum growth in premium, where the government can even get much more tax, the base is widened, and the money to go back into investment through the capital market. So for me, I'm an ardent supporter of investment in intermediaries, and I can say that without fear of contradiction, because that is something I did, and I'm very proud of what I did for the intermediaries, because they are part of the legacy of CIC, they are part of the legacy of what I left behind in the insurance industry. And I want to end there, William.
Thank you very much, Chairman. A wealth of experience, and you're speaking experience to us, and we're very grateful for your passion and advocacy for the agency. And the agency model, clearly we have seen the cooperatives, and you have spoken cooperative is insurance and insurance cooperative. If you are still the active CEO, I could have said you are marketing yourself, but clearly insurance is about cooperatives, and we really appreciate, Chair. And just to highlight is that you have said in this season of the storm, it is for us to disrupt ourselves and to adopt technology. Clearly, everyone is going digital, and so we are looking at opportunities that we can harness together. The cost of doing business, of course, if we adopt technology, then the cost of doing business can be enhanced. If we, you've talked about shared services, we could be able to come together so that we can work on technology that we can share together, and that technology will be supporting talk of client generation, of course, lead generation, and today over 90% of Kenyans have smartphones, and they're online on all these areas. Of course, we say insurance is not bought, it's sold. As a point of contact, I'm sure with this opportunity, as an agency, we are working together to see how we can be able to, one, harness on technology, and we come together. And that's why we are doing these forums. You've also mentioned on how we can come together in terms of shared cost on accounting services, and just being able to move business into shared services. And we really appreciate for that well of experience. We appreciate that also you are saying clearly to the underwriters that the most important role here is the important and the greatest investment is investing in intermediaries. And of course, you're not gambling. Your experience and your work with CIC is a clear demonstration that your investment was in intermediaries. And so we pray that we'll be able to engage further. You are still the elder in this space, and I'm sure as we engage with them, we can walk with you even as we have a conversation with them, so that they appreciate technology may come, but the agent needs to also engage the client even further. So we appreciate.
Yeah, something, William, which I needed to reiterate.
Yes.
Is also the position and the image and the dignity of the agents in our market and in our setup for a long time. You find that people look at insurance agents as the lowest, as just a stepping stone to other things. So it is never looked at as something valuable from an intrinsic point of view on its own. And I think the agents themselves, the intermediaries, need to change this narrative. And by the way, they also look at insurance business, that you are not just selling policies. You should look at yourselves from a purpose point of view. What is your purpose? And in the insurance industry, you offer people solutions to their risks. And through those solutions, you empower them. So if there is anybody who should actually be celebrated, it is the agent. The kind of empowering solutions that they give to ordinary men and women to cover their lives, to cover their businesses, to cushion them. They should actually be very proud of having agents, intermediaries, and treat them with dignity that they deserve. But I think we ourselves as agents and the intermediaries need to invest in terms of growing and changing that narrative, that we see our profession as a profession of dignity. It is not, by the way, it is something that has made people rich in developed markets. If you go to the US and other developed markets, some of the people earning the highest salaries and commissions are insurance agents. They are part of the wealthiest people in those markets. So even here, we need to change this narrative where the agent is looked at. When they go to approach a client, they go like they are begging, they look desperate. It should be the converse because of the solution, but it is only because we also have not taken our business seriously. We don't see ourselves as giving people solutions and empowering them to change their lot, to move them from poverty on a sustainable basis, because insurance brings in that sustainability. Without insurance, if a loss comes, you go back to poverty. But with the insurance, it cushions you that you can only remain where you are, but you can't go anywhere below. That is something that we should be proud of, that we are lifting people from poverty on a sustainable basis. Therefore, we have a big purpose, and our purpose, therefore, goes beyond selling a policy. We empower, we transform, we sustain. And therefore, we should be taking our business with dignity, and we should not allow ourselves to be treated in that way that the typical agents have been treated in this market. So we need to invest in terms of improving the dignity and image of the intermediary. They are not beggars, they are people who give people solutions and empowerment. Thank you.
Thank you very much, Chair. And that calls us to the role as a peer and the leadership. How can we engage so that we, as you say, we dignify, or rather we bring dignity to the role of the agent, that we are not selling insurance, we are not sales agents. We are empowering, we are transforming, and we are sustaining the economy. And thanks so much for those great insights. As you conclude, Chair, please, what is the future of insurance? With this cake being too big, what is the future of insurance, and where is the role of the agent in that future? Did you get me, Chair?
It's happening actually.
Sorry?
Sorry?
Yes, I can hear you now.
Well, you can hear me. I'm
Yes.
saying such happenings like we are seeing now,
Yes.
and what we saw during the political violence, I know the insurance industry came together and they came up with the policies going forward to cover even political violence, and even started thinking about other areas of collaboration and thinking ahead. Even this COVID-19 is making us think ahead. One, what we have learned is that, like I have said, these pandemics, these catastrophes will be there. They are part of life. They are part of business. There will be cycles where they come. So one of the critical things that I said and which I reiterate is taking a strategic approach to the way we do business. Have a business plan so that in the event of such a thing happening down some years down the line, we will not be caught with our pants down, like they say, in a manner of speaking, like maybe we have been caught up this time. We must be setting aside something, because that is what is also going to improve our resilience. But being able to set aside something means that we are also growing. So how do you grow if we don't invest, if we don't even sharpen our own skills, how we don't reposition ourselves by embracing technology so that we remain relevant and we remain aligned to the dynamics of our industry. So we need to be flexible. We need to be sharp now and smart the way we do business, knowing that tomorrow something like this can happen. So we should be ahead of everybody else of even setting aside some monies or even taking requisite policies to cover ourselves, from such kind of eventualities. And what I am saying, the agents need, or the intermediary needs to re-engineer themselves. You need to, reposition yourself technologically and even professionally. It is important that we continue shedding off that image of people who cannot be trusted much to people who can be trusted most. That's the way we are going to unleash the potential that is there. I think we also need to look at our business from a long-term perspective. Let us not look at has become the Kenyan culture. Everybody wants to become a billionaire tomorrow. Everybody wants to drive a V8 tomorrow, irrespective of where it comes from. I think let us be values driven. Let us go by what the Bible says, that God blesses the work of our hands. He does not bless theft. He does not bless cutting corners. The Bible tells us that he blesses the work of our hands. The work of our hands means discipline. It means hard work. It means taking a long-term perspective in whatever we do. So let us not be mesmerized by this culture that has beset our nation of everybody wants to grow rich tomorrow. Let us invest in time, do honest business, do ethical business, and I tell you, we will surely be rewarded. And at the end of the day, when we look back, we will look back with a sense of great satisfaction and pride that what we have has been blessed because it is honest and gotten honestly. So let us have a long-term perspective. Let us grow our business slowly. Let us come up with the structures, like I have said, do a business plan. Even if you are an individual in your own office alone, you must take yourself like a big business. You must have a business plan. What am I going to do this year? What is my target? What kind of customers am I talking about? Where has been my strength been? Can I build on that strength? Where has been my weakness been? In which sector? So unless you have a formal thinking setup, even for your own self, you will be waking up just going where you feel like you want to go tomorrow. But so you are not focused. And that way you'll not be able to grow your business and yourself well. So it is important to take some time off once in a while. Go to a retreat yourself, your own retreat, and think about your business. Where do I want to be 10 years down the line? Would I want to be, a small-time agent? Shall I have grown? What will I be doing that time? This kind of forward-lookingness is very, very, very important, even for us in our individual entrepreneurs setup. That's how some of the biggest organizations grew from a small individual office. They have now grown to become transnational corporations, the likes of Microsoft, if you know where they started in a garage somewhere, the likes of, Apple. They started just like you guys, being in a small office somewhere. But because they were focused and they had a big picture approach, they had a purpose. They were purpose driven because they were offering solutions. They were not just selling computers or software. They were offering solutions that empower people, that make a difference in people's lives. So that was their fire in the belly every morning, that drives them every morning. I want to change humanity. I want to contribute to their well-being. But when you think yourself as selling a policy, that does not fire your belly. So you have to change paradigm the way we think by taking a strategic approach.
Wealth of wisdom, wealth of wisdom. Thank you, Chair, and all your speaking is just wisdom to us and experience, and we appreciate. And as you say, what's our way forward is to reposition ourselves. Sorry, you can hear me? Yes, it's for us to reposition ourselves strategically, in terms of technologically, professionally, but also you've put some underlying notes is that it has to be value driven. Our business is value driven, and we have to stand by the values, our ethics, and especially our business is ethically driven, and so we cannot compromise on that. And we really appreciate for that, and you have really spoken to our hearts, and we are saying that it is a long-term business. Even as we plan on this strategy, we are looking at it from a long term. So COVID is just a season, and it's just a pandemic that passes. But even as they come, many other issues come, we are looking at a long-term business, and we will be in that regard. And so, my colleagues, that is our great insight, that that COVID is just a season, and it's just very short term, but we should be looking at a long-term aspect. So it is with great joy that we really appreciate you, Daktari, and thanks for that great wisdom. Ladies and gentlemen, we have very special guests also with us, but before I invite them, just some closing remarks from Daktari, then I can invite our special guest from South Africa. We have Trevor, we have Christine, and I'll allow Chairman to introduce them. But let me just allow Daktari to give his closing remarks and just a word of encouragement to us. Daktari, please.
Well, just to end by saying, just like you have said, COVID will come and go. Others will come and go. So the issue is, how do we position ourselves? How do we align ourselves to the dynamics of our industry? How do we plan for such kind of eventualities, such kind of cycles? And that is why I'm saying we must professionalize, we must be strategic, and above all, we must embrace the culture of hard work and the long-term perspective in whatever we do. Insurance is not built on short-termism. It is built on long-termness. And I'm so proud of intermediaries. I don't subscribe to the view that they are an endangered species. They are only an endangered species if they do not re-engineer and reposition themselves. And I believe they are doing tremendous work, reaching out even like now to the informal sector where, big insurance companies themselves can never make it there. Even the big brokers will never go to those SMEs, Gikombas and the like. It is that agent who is able to go to those places and unleash that insurance potential there. So take your position, take yourself seriously and with dignity. And I can say the sky is still the limit.
Thank
the
you.
sky is not the limit.
Yes.
It will be the floor.
Wow. Wow. Wow.
A lot needs to be done. Yeah.
Thank you very much, Daktari. And a round of applause wherever you are to our Daktari, and we really appreciate you for that very special session. Time has really gone, but we have just people to say hi. Clifford, please just help us introduce our very special guest.
Okay, before I think the session is moving well, I'll just take this opportunity to welcome 3 people who have been my friends, and we meet and we have a lot of webinars on the site. I'll just call their names and they introduce themselves. I'll be calling Trevor from South Africa. I'll introduce Christine, and then and even Vince. So they will just introduce themselves. Trevor.
Great, thank you very much. And Dr. Currier, that was very inspiring, and it's great to see. That was brilliant, very inspiring, and exactly what we stand for as well. I think you hit the nail on the head. Professionalism and long-term thinking is what we need in this industry. You know, I think the industry's had a bad rap, bad press, and it's our opportunity to fix that. So thank you very much, Clifford, for the invite, and I look forward to engaging with you in the future.
Thank you very much indeed, Trevor.
Thank you, sir.
Thank you.
Christine, please. Christine.
Is she with us or Vin? Okay.
There she is.
Okay, I've unmuted myself. I will not put video for now. Okay, I'm Christine. Thank you for the invite. Yes, thank you for the invite, Cliff. And we highly appreciate. I'm from a company known as Urban Ubuntu. We are a cybersecurity firm for fintech. And yes, it was good to be in this forum and actually have to understand on what insurance agents do. And yeah, it was very inspiring. And thank you. I really also learned a lot from tips from the chairman. Thank you very much. Thanks for the invite.
Thank you very much indeed.
Thank you. Cliff, back to you. We had another guest, Chris. Cliff.
That is Vince. Vincent.
Yes, yes. My name is Vincent. I'm with Hillcroft Technologies, and we've actually specialized in providing technologies for insurance companies and also as well as agents. So as Dr. Curry was talking, I was saying, definitely we do have the technology here with us, and we've been building this for the last 5 years. And the key thing is we've taken time to understand the problem and the teething problems in the industry so that we come with an elaborate product. So I can equivocally tell you that the technology is actually available. So we have a platform that people can join in as agents and do everything that they want to do. Checking their policies, managing their clients, contacting them. So, and also I have with me also on the line, Chris, founder of the company, including Chris, who is also a co-founder. So I can tell you the technology actually exists. So I was just saying, wow, Daktari just nailed it. He actually said everything that the industry needs, and it's actually available. So we are Kenyan, so we're 2 of us Kenyans, and we've actually said the solutions are right here with us. So we've already expanded to Rwanda, and we hope to go to East Africa very soon. So we're building a platform that is very Pan-African. So we, if anyone wants to engage, I'll be glad to do a demo. Yes, I can show the powerful technology that we have built. And thank you so much, Clifford, for inviting me. This has been very insightful for us.
Thank you, Vincent, also to hear good things that you are doing.
Thank you very much, Vincent. And we'll have a conversation and we share the opportunities that we have. Ladies and gentlemen, I know people might be heading home. For those who are still in office, the curfew is not with us. We need to be checking there. And so mine is to really appreciate every guest that has been here. But before that, Dipesh, I need to honor Dipesh. He's been very active and very much here. Dipesh, if you can unmute yourself, and just you have been all along, so let me appreciate you. Dipesh?
Sorry. Please repeat what you said.
I'm saying I'm appreciating you that you have been very consistent and following. So please say hi and
thank you. Okay. Oh, mine is like this was a very fruitful meeting. I learned a lot the past 1.5 2 hours. I was not present in the past 2 meetings. I have not been a member. Tomorrow, God willing, Monday, I'll be joining in. And there's something I want to say is like, let's unite. Let's unite. You know, people are taking us for granted. Somebody down the line said, there's so much I want to say, but it's just I just cannot say some things. Thanks for Kiriba for this join.
Thank you.
I've been doing gestures all around the whole meeting. I've been doing some gestures and whatnot. Let's all unite. Let's not compete with each other. Let's not compete with each other. Let's share our views.
Thank you.
Yeah, but Honorable Nyangas wanted to say something.
All right. Allow me to conclude, ladies and gentlemen, so that we can have a close on this. We could have, I think we have had question and answers which have been here, and we have been able to respond to most of this. But again, our platform on our email and the various platforms that we have are available so that you can ask more questions, so that we prepare in advance, so that we can have more engagements with our guests. So again, much to appreciate Dr. Kuria Nelson. Thank you, Elias, for being with us, and even Peter, who was there before. Thanks for your active participation, ladies and gentlemen. And I look to more and more of these conversations so that we can be able to grow one another. Thank you.
And thank you, William. You have handled it so well. I'm so proud of you. Keep up the good work.
Thank you. I will try to manage time going forward, but again, the conversation was quite wide, and we hope we'll be able to manage better in the upcoming
weeks. Goodbye to you.
Thank you. I'll just conclude with Jackie closing for us with the word of prayer. Jackie, you always speak for us.
Good.
You have to speak.
That is good.
Active member who has been here all along. Jackie, please close with the word of prayer.
Hi, everybody, first of all.
Hi, how are you, Jackie?
And thank you, Dr. That was very insightful. Thank you to all the speakers we've had. Let's conclude with a word of prayer.
Amen.
Jehovah, we thank you once again for another good meeting that we've had, very insightful. Thank you for bringing us together. Thank you for the people who continue to prepare for these meetings for us, Jehovah God. We pray that you may continue guiding us and giving us way and giving us solutions to all the issues that we may have, Jehovah. We pray for protection and care and good health amongst all of us. In Jesus' name we pray.
Amen.
Amen.
Thank you, everyone. Thank you. And
Amen.
Thank you yourself. Looking forward to seeing you again next week. All right. Bye-bye.
Yes, thank you. Yeah, bye.
It was insightful.
Thank you. Thank you, Mheshimiwa.
Yeah.